Hi, everyone, and welcome, welcome, welcome. This is Dr. Michelle Debbie Kofer. We're going to get ready to get started in about a second. And as we prepare to get started, I want to just say to you, welcome home. Welcome, welcome, welcome to this amazing presentation we're going to share with you. And you're landing here because you are interested in becoming a homeowner. Someone shared with you that there was an opportunity for you to get in position with the knowledge, the resources that you need so that you can get a clear to close, which is our favorite three words in the real estate world. So if you're watching this video, it is for you if you have a value around home ownership. If you're tired of renting and you're ready to own, this is for you. If you're that person that says, I'm willing to invest the time, energy, and even financial resources that I need to become a homeowner, this is for you. If you are focusing on ways that you can leverage real estate to build a legacy, even if you're starting with just your first home. And so, again, my name is Dr. Michelle W. Kofer. I am affectionately known as the Pivoter. I help families pivot to prosper. Homeownership is one of those ways that I help families. I am a mortgage loan officer in all 50 states, as well as a financial literacy and certified credit coach. In addition to that, I am a business funding broker, a goal setting, certified goal setting life coach, amongst many other things. But ultimately, what you need to know is I'm a homeowner. Even though I grew up in the projects, even though nobody around me had a compass around financial literacy or the importance of home ownership, I knew at an early age that homeownership mattered. And at the age of 26, I endeavored to buy my first house. I became a homeowner. I became the first homeowner in my family at the age of 26, the first of all my mom's siblings, children, and grandchildren of my grandparents on both sides. So that was a big accolade, but I didn't have a realtor. So I went into it blind. I went into it ignorant. Unlike you, I didn't have a Zoom or replay to watch, but I ended up buying that first house, but because I did not work with a professional, I inherited bats, I inherited water damage that led to mold damage, and I ended up with a big headache on my hand. And so I ended up fixing that, obviously, but 6 years later, I decided I wanted to move to the big city. I wanted to move from the country to the city and decided to sell that house. And that's when I realized there was wealth in real estate. Put that in chat, guys. Wealth in real estate. Whether you believe it or not, your first house is an asset that can be leveraged to create your wealth. And so decided to sell the house. God favored me. I ended up with a cash buyer. And that's when I truly, truly realized that there was money in owning a home. And so it's not just, transition out of rent to ownership. There really is a value there. So anyway, was able to sell that house and I leveraged that money to start my second house. But what is amazing about that, now buying my second house, I was able to build it from the ground up. Again, little black girl from the projects. And so it's just really important for me to share this message with you that home ownership is important. I rented all of my childhood and, a vast part of my adult life up until age 26 years old. And I have owned a home since then. And then I get into that house and I build that house from the ground up. And I'm really, really proud. But how many of you ever been out of work? How many of you ever been laid off, underemployed, or unemployed? Put a two in the chat. Well, that was me. Got hit with 8 months without a job. As a result, I couldn't pay my mortgage, ultimately filed a bankruptcy. The court graced me to be able to sell that house. And I just look back and say, if I was renting, I would have just been bankrupt with $0. But the court allowed me to sell that house and walk away with multiple five figures from the transaction, even in the midst of a bankruptcy. So what does that tell me? There's money in real estate. Okay. And so you're on this line. Go ahead and stop right now if you're not already in position to focus, take some notes, and have something to write with and write on. Go ahead and grab something. Okay. And so you can just pause this video and you can come right back, but you want to make sure that you're focused because home ownership is not just a one-time action. It's a process that starts ever before you get the keys. And even when you get the keys, it's an ongoing process. And you've got to understand that this is a big journey you're about to take. And I'm excited that you are interested in taking this journey with me. All right. So welcome to the presentation. I want to welcome you to our home buying workshop. Again, Dr. Michelle Kofer, I'm going to help you pivot into home ownership. And so I want you to be very attentive to what I'm sharing here. I've partnered with a huge initiative called Freedom Path, and our focus is to be able to bring home ownership to Americans, specifically to the minority community, because we are the least and the lost. When you look at home ownership rates for African Americans in the last several years, it's averaging about 6% of all homes are purchased by Black families and about 8% Hispanic families. And so we know there's a huge disparity around that. and I am committed to closing the wealth gap. And so regardless of what race you are, I believe that 75% or more of all Americans actually deserve to be homeowners, and that's why you are here. So I'm going to talk about several things. This is our agenda. We're going to talk about renting to owning, the mindset that's required to get into home ownership and to keep home, to keep yourself in the status of being a homeowner. We're going to talk about the 5 stages of home buying, as well as options for you to get to the money, right? Nobody's writing a check for $300,000 when they can finance on somebody else's dime, right? And then I'm going to talk about how there are opportunities for you to partner. So let's talk about renting to owning. Like I said, I grew up renting, and that's what I knew for most families. That's the value norm for most minority families, most rural families. And renting does has its temporary benefits. I mean, it's going to allow you to, move when you want to move, go when you want to go. But regardless of where you are today, whether you're renting or, not, I want you to know that your financial situation today can always change. Your credit score doesn't have to always hold you back. You making a decision tonight to watch this call, to participate here, and that means you are ready to make that commitment to be a homeowner. But the reality is a lot of people rent, and there are different reasons why people say that they do, right? And so it's flexible. Like I said, short-term lease, move when you want to move. You have less money to pay up front. And people believe that even though most landlords require you, 2, 3, and even sometimes up to 4 months security deposit. So people just have the perception that it's cheaper. And then that, it's low maintenance. I don't have to cut the grass. I don't have to worry about what happens if the water heater goes out. And those are things, quite honestly, that the landlord has already factored into your rent. So whether you believe it or not, if you are renting, you're paying those additional costs. They're just cushioned in, and you're taking care of those expenses for your landlord, and you're helping them build a legacy. And that's why you should own a home, because you deserve to, right? Wouldn't you agree that you deserve to have something that you could call your own? If you agree, put yes in the chat. You have something that should be yours, that you can leave, behind. And so there's a true feeling of accomplishment. Ownership just feels good. I can't tell you how proud I was, how proud my mom, my family was. Even amongst my friend, I was the first homeowner at 26 years old. But what was important about that, y'all, is there's wealth in real estate. Number 2, 3, and 4, this is all money, equity, appreciation, and tax deductions. That's all money. So when you own a home, you build equity. So that equity can be leveraged as income to pay off your debts. You can use that equity to refinance, get cash out of that house, and invest in a real estate property. So you could have one house and have a second house as an investment property because the house appreciates. And so even in appreciation, you decide you want to move to another state, you could sell that house, walk away with, tons of money, or you could rent it out and create positive cash flow. All of those things are going to help you to build wealth and create a legacy for your family. Now, I am a tax professional and tax strategist. I don't think I mentioned that in the beginning, but that is one of the hats that I wear. And I can tell you right now that if you have a house, you're going to get a 1098. You're going to be able to deduct that mortgage interest and those property taxes. But if you were renting, you don't get that luxury. So there's benefits in you owning a home, as well as the fact that you create stability for your family. You don't have to worry about moving every 3 months, every 6 months, 12 months. You don't have to worry about the landlord selling the house from under you. You don't have to worry about your neighbors stomping on your head and all of this. And it stabilizes your credit. So when you rent, that doesn't automatically report to the credit bureau. However, for those of us that are homeowners, it does. So it really stabilizes your credit. And as you stabilize your credit, you're able to now use your credit to leverage OPM, to build a legacy, to tap into entrepreneurial ventures and investment opportunities for your family. So I just want you to take a screenshot of this, because when you rent, you throw money away. It's just that simple. I know you need a roof over your head, you need a place for your kids to stay, and that's great. But I want you to create a goal right now. I want you to do this. In fact, calculate what you're currently spending for rent and multiply that, by 12 months. That's going to tell you what you spend in a year. And so if you're the average rent in America right now, which is about $2,500, that's $30,000 a year you give away. 30,000. You're never going to get that back. And imagine you stayed there for 5 years. That's 6 figures, 150,000. 10 years, God forbid, but it happens every day because we say, oh, I love where I live. It's convenient to my job. My church is around the corner, my kids' daycare. But guys, that's $300,000 that you just gave to another person to build their legacy. They're leveraging you. This is your time to turn that around and go out and get your own home because even as the market can fluctuate, the thing about it is nowadays rent is just as much as owning a home. So you need to stop telling yourself that it's just comfortable. It's not. You say that to psych yourself out, but that's where you need a home buyer coach, which is what I do to help you. So rent prices are on the rise. And, even when you think about it, the minimum credit score to get an apartment or to rent a property is actually higher than it is to own a property. Can you believe that? Well, that is the truth. And so it takes a mindset, guys. In order for you to build wealth through real estate, you got to be open to exploring what you know, what you think, and how you feel about money. Because I'll tell you, even though I grew up in a project, God has graced me with a wealth and abundance mindset. And so I understand that, you have to know the rules of the game in order to win. And I just want you to think for a moment, where did you learn about finances? For most people, it definitely wasn't at home. It definitely wasn't high school or college. You learn in school of hard knocks. You learn by making mistakes. You learn with your first credit card. You learn what to do from people who don't know anything about money. They give you bad advice. Grandma, don't get credit cards. Well, actually, credit cards help you improve your credit score, right? And so even you think about what you've been told about money. Money doesn't grow on trees. We can't afford that. That's for them. That's for the people on the other side of the train. It take money to make money. Those are all narratives that have been embedded in your head. And I'm not lying. If you know I'm not lying, drop a 5 in the chat because I'm going to tell you right now, we all learned that. And our families did not sit around and discuss why you should own a home early. They did not talk about appreciation. They did not talk about equity. They never used the word leverage. And so as a result of that, we missed opportunities. But this is where now you can change your mindset. I love the fact that as a mindset coach, I get to bring the work that I do into what I'm doing with home buyers, because whether you live in a one-room shack right now or you're renting a 5-bedroom house that you're paying $5,000 for a month, it's not yours. Stop believing that and take that facade down. It's not yours. I don't care what you tell yourself. You've got to understand that you deserve a home that's yours. You deserve something that you can leave for your children's children. And so, how do you shift that? You get exposed. You get around people who are homeowners. You go drive through neighborhoods. I take my daughter through neighborhoods where there are mansions. We have a vision for what we want to live like. And so, ever since she's been a baby, we've always cast a vision. But that's why for me, I had a wealth mindset because as a little girl, I also had exposure. And the important thing about shifting how you think about money is learning about it, financial literacy. And so reading, attending workshops like this, investing time into yourself to learn more so you can become better. Financial literacy is, just you learning the basics about how money works, saving, investing, make it a fun family activity. My daughter is 9 at the time of this recording. She's been talking about leaving a legacy for your kids since she was 2 years old. You know, Excuse me. So she's always talking about it because we are always talking about it. And so learn the basic financials, the terminology you need, read books, come to seminars, ask questions. I do provide consultations. You can always go on my calendar. I'll share that at the end, but it's www.michellewcofer.com. If you need a customized budget, I can work with you on that. If you need a game plan around your credit, I can assist you with that. Whatever you need, guys, learn that it's okay to invest in yourself, but it's okay to use a professional if you don't know something. You want to make sure that you're setting clear goals around when you want to move into your home, why you want a home, how much you really can afford, because home ownership is definitely where, living like the Joneses has to stop because you don't want to be house poor. Consider what you really, really want versus what you really, really need, because they're two different things, and then create a strategy. Most of the times when I'm working with clients, they can't qualify to buy either because of their credit or because they don't have enough money saved, or they just haven't managed their money well. So what can you do right now? You can eat out less. You can manage your money. You can, work on using travel taking travel that's inexpensive, or, doing the free events. You can even pick up a side gig as a broker. I do this on a part-time basis. As a home buyer coach, it's all a part-time basis. But guess what? It brings extra money. It brings the ability for me to choose when and where I work. So it creates a freedom there. And so we are looking for brokers. If you're interested in that, certainly let me know. And I can show you how you can get paid to do exactly what I'm doing with you right now. And so I want you to understand that you must assess your credit. A good credit score is going to determine what your interest rate is going to be, and having a clean credit history is going to determine if you get favorable financing. So you can't get into a house with a low credit score. I don't like working with real estate professionals that push that, because at a 580, you're going to be paying for that house 2 times. Okay. So improve your credit score. You can get a free report at annualcreditreport.com. And if you need credit repair, I have an amazing AI bot that's second to none, that literally is, super affordable, family friendly, that allows you to go in and target those negative items for removal. But in addition to that, guys, you got to pay your bills on time. You got to work on reducing your debt, getting a control on those credit cards, because that plays a major part. That's like 165 points right there, just managing your credit card debt, keeping it healthy. And don't go out and just add all these lines of credit and trade lines and doing all this stuff that these TikTok gurus are trying to convince you to do. Work with your professional, because you're going to be able to get the most expedient results in a legal manner that definitely resolves your delinquencies. And you're not going to get to the closing table and find out this loan is not going to be approved in underwriting because somebody did a swipe or a sweep. Okay. So you just want to be cognizant of that. So 5 ways to purchase a home. Very simple, guys. Understand from day one that home ownership is not about right now. It's about forever, and or what's going to happen to that home beyond the closing table. So what does that mean? Start with the end in mind, understanding that home ownership has expenses. Can they be reduced? Yes. Can you manage them? Absolutely. But it goes beyond just saving up for a down payment. So you want to make sure, as you're going into this, you're planning the timeline, because you're going to have to pay that mortgage on time every time. And you're going to have, the possible of home repairs or maintenance or things like that. But you're already paying those. They're just a part of your rent. And then depending on where you live, you might have a homeowner association a fee, or you might have, property insurance or property taxes and things like that. So you always want to plan for unexpected emergencies. And then secondly, you got to get organized. Most people have not kept up with their tax returns, and stuff is all over the place. So you want to get organized before you start looking for a house. Make sure you go ahead and know your credit score, because as a loan officer, the first question I'm going to ask is, do you know your credit score? First question, because we're looking to screen, right? And that's going to determine your interest rate. But also think about, homes that are, or I guess a price range that's within your budget. So think about what's the most you want to spend on your mortgage, and then also save for any upfront costs that you may have. Save, set things up on monthly auto draft, and that way you don't have any new delinquencies or missed accounts, because that can have a devastating blow and it could kill your deal. Third, you want to gather up your documents, create what I call a rent to own folder. Get your manila folder, an envelope, a notebook, put all your pay stubs in it, your last 2 months of bank statements, your last 2 years of tax returns, proof of any income you receive outside of work. So if you have child support or alimony and you want to count that, you get subsidy from the state, adoption assistance, you get railroad disability, whatever, you bake cookies on the side, you have a food truck, whatever, you want to have proof of that, because that income can be counted to help you with your debt to income ratio. You also want to make sure you have the ability to prove that you are you, and you do that with your license and a legible Social Security card. Number 4, guys, is so critical, and that's why you're watching this, and I'm grateful. But you want to assemble your dream team. You want to make sure that you're not doing this alone, especially if it's your first rodeo. As I shared with you, I've had the privilege of being now a 3-time homeowner and a real estate investor. I own land that I'm going to develop, as well as I am a silent partner in Airbnb industry. And so I can tell you that there is money to be made in real estate, but how do you create that money? You start with your first home. You start with ownership, but you don't do it alone because you make a lot of mistakes. And so you want to definitely have a home buyer coach, a credit specialist who can assess your financial situation and show you strategies to legally improve your credit, so that nothing backfires at the closing table. I have been certified in credit repair since 2018. I'm very skilled, knowledgeable, and credentialed around the laws of credit, compliance, around credit. And I also have access to attorneys, I have access to budgeting tools to help you get qualified to buy. And then, of course, you got to work with a real estate agent. I know tons of realtors if you need one, and they're going to help you with shopping for a house. That's their job, right? Your credits person is all about, making sure you understand the process. Your real estate agent is making sure you find a house. They're going to do the shopping with you. They're going to meet you at properties. They're going to look at, the size and, based on what you can afford, which is what the lender decides or the loan officer decides based on what you can afford, the realtor is going to shop you houses within that price range. And so just remember, never get married to any particular thing in your mind or your heart, because with real estate, it could always change, especially this market is so volatile that you could be looking at a property today, you're ready to bid, but this evening somebody just close on the deal. And so you just want to make sure that we're setting the proper expectations, because we do want to get your loan pre-approved, right? The pre-approval is going to be a screening process whereby now, as a loan officer, I'm going to be able to share with you, my team and I, that you are pre-qualified for a certain dollar amount based on, the income and the records you showed. So this is going to make sure that we can comfortably keep you in your budget. Nobody wants to sell you a house that's going to lead to being house poor or that you're broke. We're maintaining financial principles here so you're not overextending yourself. And then once you got that pre-approval letter, a realtor is going to trust that and they're going to work with you more confidently to make sure they're pushing inventory your way. Okay. So we talk about, how do I pay for the house? What do I use? Maybe right now I don't have a lot of money saved. That's where we get into financing the home, right? I don't know one person that bought their house cash. I mean, unless it was like a real estate property, right? But as far as residential, where you're going to live, I don't know anybody. So we got to show you how to get to the money. And I love that. I am known as the pivoter, helping families pivot to prosper. Prosper is all about prosperity. And so you want to consider a few things, as a buyer, making sure you don't go bite off too much, right? Work with your loan officer. That would be me. Your financial advisor, coach. That would be me, to make sure we're in the right range, right? Let's look at what you have versus what you desire and make it match up. Long term, what are you trying to do with this house? Is this going to be your forever home? Is this a fix and flip later? Do you plan on being here for a short term? Are you going to use this as a rental property? Are you going to have tenants? So just considering what the purchase is so we can make sure we get you the right financing. And then also looking at any additional costs like HOA, taxes, insurance. And then, of course, always, always, always keeping that credit score at the forefront of your thoughts. What's my credit score? What can I be doing to elevate it? The higher the score, the better the terms. And I'll tell you guys a little secret. On the loan officer side, if you have really good credit, your interest rate has to legally be reduced by a certain fraction of points. On the flip side of that, while lenders don't have to add points to your interest rate, they can. And it's often done. And that's why you'll see people, with an 8%, 9% interest rate because their credit score is just low. And so you want to also think about how much money you have saved. So consider your finances and start putting money away right now, with the specific purpose of it being for down payment. I am not a fan of saving money. If you've ever been on a financial workshop with me, you hear me talk about that, but I am a fan of saving money with a purpose. Money in a regular savings account doesn't do you any good. The interest rate is way too low. It's not even a fraction of a penny. So you want to make sure when you do save money, save it in a mutual fund or a money market account or something, but save with purpose. And that is to be able to purchase your home. So here's the do's and don'ts, and I'm almost done, guys, of the mortgage process. You want to make sure you get that pre-approval, pay all your bills on time, keep all your documents. You could be purchasing over the holiday, your job is closed, you can't get in your HR portal, you're locked out, and the lender is saying, hey, we need a pay stub right now. We got to verify, and you can't get access. So through the home buyer process, your vanilla rent to own folder is going to be where you keep all your documents, all of the bills that you paid, even if you recently recently paid something off, it may not have updated to the credit report. And so that's why you want to keep a copy of that. And at all costs, protect your credit. You want to make sure that you understand it's going to get checked again. So when you start the home buying process and they say, okay, you're good to go with your credit, that doesn't mean you're in the clear. So you don't want to go buy a car or a truck or anything like that. And that takes us into the don'ts. Don't buy any unnecessary purchases or have any new inquiries on your credit report while in the home buyer process. You do not want to deposit any large sums of money. Anything beyond 500 bucks has to be traced and sourced. That could take time. So if you get a cash flow win, just leave it at home. Don't put it in your bank account. And then don't miss any payments on anything. Don't start a new job. That will kill your mortgage deal. If you just started a new job, we're looking for tenure. So that will definitely impact you. Also, don't move the money around. Don't change your bank accounts. Don't go co-sign for your kids on a Parent Plus loan. Don't do anything crazy with your credit cards. Don't go out and buy up a whole bunch of stuff. And then, the more important thing, guys, that I want you to know, if you hear nothing else, do not get discouraged. It's a process. I've been through the process 3 times. It never was perfect. With this house right now that I'm sitting in talking to you, we have right about $200,000 in equity that I've been able to leverage from. But what I want you to know is it took us, man, maybe 3 or 4 months before we ever got this house. I remember it being maybe spring or summer because I have the pictures with the house going up in construction and my daughter, having her little Home Depot cake. But guys, we didn't move in to December 30th. So even let's just say if we started in June, that was July, August, September, October, November, December, it was 6 months. And so I did get a new construction. So of course the house had to finish being built, but it was not an overnight process. And so even when you start and you get, bad news or something happens with your credit, keep your head in the game. You got one goal, become a homeowner. You got one goal, and what's that, y'all? Put it in the chat. What's the one goal? That's it. Become a homeowner. So no matter what you have to deal with, push your way through. So let's talk about different loans that are out there because there's a lot of money out here. Conventional is probably the most common. And this is going to allow you to have a 620 credit score, and your debt to income ratio can be up to about 48-50%. So you don't want to carry too much debt with that. But the conventional loan does let you buy your house. Sorry, guys. The conventional loan does allow you to buy your house with as little as 3% down if you're a first-time buyer. And if you've purchased a house already in the past, you can do 5%. This is the better loan because you're able to not have to have PMI, which saves you money over time. Otherwise, if you put anything less than 20% down, you're going to have PMI, right? FHA is another very popular loan. This is a government-backed loan, and you can have credit scores as low as 500s, right? But you're going to pay for it, and it's going to be costly. But if you are an affluent person, you have a lot of money on standby, then having a 580 is not so bad because you can always work your way through that deal with your cash flow. But with the FHA, guys, you do have to put 3.5% down. That's non-negotiable. It can come from other sources other than you, but 3.5% is what's required. And if your credit score is in the 500s, or somewhere as low as 500, I should say, you got to put 10% down. USDA, these are loans typically in suburban, rural areas. Don't get it mistaken. A lot of times people think that USDA loans is just for land, but it's not true. You can actually buy a house. You can buy a very nice house with a USDA loan. In fact, a USDA loan has to be within an eligible geographical region. So you could actually be like 5 miles, 10 miles from the city and get more house for your dollar, and you can not have to require any money down. That's the benefit of USDA is you don't have to put any money out of your pocket as a deposit to secure the loan. You will have closing costs, but that's different. Also, the VA loan. This is for our veterans. We thank you for your service if you're watching this. But again, zero down and then lower interest rates if you are a VA. So if you are a veteran, immediate spouse of a veteran, then you are eligible for a VA loan. Okay. And so there are two types of rates. One is fixed rates, which means it's basically the same all the time, no matter what. Your mortgage payment is going to be very predictable. You can determine what you're going to be paying because your rate is not going to change. All right. And this also is great for people who, planning on living in their forever home because you can predict what you're going to spend and how much and when you'll be mortgage free. But then there's also the adjustable rate mortgage. And I know part of the market collapse before was, people had these adjustable rate mortgages or ARMs and their payments ballooned. And, a lot of people lost their houses. A lot of people got rich as a result of that because of predatory lending. But the adjustable rate mortgage is not something you have to be scared of. And it's still okay to do it, right? You just got to know the circumstances. And that's what I like to work with my clients to help you identify what's the best type of loan that you're going to need because you may be a millennial who plans on, only living in a certain market for a short period of time. And guess what? An adjustable rate could work for you. And that means you're going to get a lower interest rate starting, but you're going to need to know you need to get out of that loan before the first 5 years because if not, that payment is going to balloon. And so typically, you're locked in at a fixed interest rate. And then that's going to change depending on the adjustable rate mortgage terms. And so the last type is a jumbo loan. I shouldn't say the last type because that's the last type I'm going to talk about. But there are other loans like real estate investing loans, fix and flip, DSCR loans, debt service coverage ratio. There are bridge loans, new construction loans, all of those. We're not going to talk about them here, but certainly I can discuss your needs on a Zoom or a telephone call, right? But the jumbo loan is for properties like your $1 million properties, anything over $725,000 typically is a jumbo loan. And in order to get a jumbo loan, you definitely have to have a credit score over 700. And typically they like to see really nice reserves, meaning you got money in the bank. Okay. Your down payment is typically going to be about 10 to 20%, depending on the lender and the builder. They may work with you on that, but just expect to pay about 10 to 20% down. And so down system programs are for people who don't have the resources to come up with, as I mentioned earlier, you may have to pay 3.5% for FHA, 3 to 5% for conventional. Well, you may not have the money. So this is where now grants or gifts can come into place. And down payment assistance can come from a family member, relative, or an entity, but it also can be a local level agency. DPA is usually rendered to individuals looking to buy from churches, nonprofit organizations, or other government entities, that focus on helping people to qualify. And so you don't need any experience to track that down, but you do want to work with an experienced professional so they can find the DPA programs in your area. And if you're going to need DPA, guys, it's typically for first-time buyers. It's assistance. And so people who have low to moderate income, if you're a high net worth individual, then give up the DPA program. You have to come with your money out of pocket, okay? But nonetheless, it has to be your primary residence, and you'll also need to work with a lender that can do DPA programs and get you qualified because not all lenders do. And that's what I love about working with me. So the vast majority of DPA programs are found at the state and local level. It's going to just take some time for you to research it. And if you're like me and you're serious about building wealth and you watch the economy, you don't have time to wait about anything. It's jump now and ask questions later because this is the wealth transfer. And so I'm done, guys. There are 3 ways that we would love to collaborate, stay connected with you. Number 1, we would love to welcome you to Freedom Path. If you're needing services, whether it's related to your credit, whether it's learning more about the business funding and the business credit, then we would love to partner with you and help you in this, getting out there and getting the results that you are desiring. Also, you could become a broker and do what I do. You can get paid to do that. And then you can also volunteer to host an event locally, either at your house, at the library, at your church. And that way we can get the information about this freedom opportunity in front of more people and they can decide. But I will tell you, I have lots of church leaders here that they partner with other church leaders. So they typically have influence around, their just main social circle, that are going to want this. And so share posts online. If somebody posts with you, say, hey, listen, do you mind, heart sharing and tag? And that way, possibly you'll see it feed into your news feed. And so, guys, that's it. I would love to be your financial literacy and prosperity success coach. If you are in the market for a home, I can help you. Again, don't get emotional. If you fall in love with a house, you're going to get disappointed if the deal does not work out. And so treat this like a business transaction and don't make any bad judgment calls. This is going to be your forever home. So don't get locked into a deal that you can't get out of, that somebody said something or wrote something that you signed your name on. That's why you want to work with professionals. So if you're out there and you're looking to become a homeowner, I want you to text the word home to 404-980-3366. Again, home to 404-980-3366. It's been my time to serve you guys. It's been my time to work with you, to empower and educate you. And I hope that you will reach out, www.michelle.recofer, and then my phone number is at the bottom right. So guys, what you need to know, this is a consumer's world. We have an FTC and a FCDPA who have females at the helm, and they are not playing games in this season. So get your stuff together, get your stuff fixed so that we're able to help you. So that's our time, guys. Thank you so much for joining. We love you. And again, congratulations on your new home. And I'm just going to say it like this: welcome home. Take care, guys.